and moving on to the main board, but really it is just a sort of random line in the sand. Issues such as sales and market cap are much more important. And in the case of airlines tend to scare me. Oil prices, etc., etc. The one difference with One Time is they've got their SAFAIR, which is a maintenance division, which earns them US dollars, and that does give them a bit of a resilience against just pure oil price and passenger numbers.
Let's move on to the top 40. We've got BHP Billiton, Anglo American down by 2.5%, both of them again today. And we saw the pressure exerted on these stocks last week, accumulated loss of 6% on both diversified miners. What is your opinion right now? Do we jump in boots and all?
You know, the selling it hasn't been relentless, but certainly it's been ongoing, as you said, last week, again this week, both of them down over 2%, and really they were the drivers taking the resources and ultimately our market south today. I like them, I always have done, and I've always said it, at price points they're worth picking up. Boots and all, I'm never a fan of boots and all, I'm always the fan of a staggered approach, but if the last run up you're sort of like, oh, I missed opportunity on Anglo or Billiton, you're getting a second bite.
The banks, we had Standard Bank and Nedbank just managing to close in positive territory as we came under that negative move towards the close of the JSE broader index. We've got the financials, the rest of the financials in negative territory. Is that around the sentiment, the European bank stress tests that are due out on the 22nd of July? I put the same question to Patrice Rousseau earlier in our discussion.
It probably is to a degree, although it shouldn't be. I don't think really our banks are very different. We saw that through all of 2008 and 2009. The stress tests, etc., aren't applicable here. But I think in many cases, but especially with international investors, when they're looking at financial institutions, they tend to lump them all together and not really find through that distinctions between them. Banks are well capitalized. Our banks were never in trouble. Bad debts hit them, but to a significantly smaller level than we saw with the Western European and Northern American banks. So short answer, it shouldn't be, but it probably was some of the pressure coming through.
And then we saw the pressure on Naspers last week. Again, I've already put all these questions to Patrice, but we're talking about the major moves on the top 40. We've got Naspers at the top of the top 40, up 4%, and it did hit that 250 Rand level last week. Your sentiment around Naspers at these levels? We closed today 263 Rand 40.
I was having a look, and what a big driver on Naspers is Tencent, which is their Chinese website. They own a minority stake in that, trading on Hong Kong. That had been under pressure. It had been as low as 124. In morning trade in Hong Kong today, it was up at 130. So a bit of recovery there. I think really a bit of that, a bit of the results coming through. Also, Koos Becker, I think, going out and explaining that some of the issues around Tencent, which had spooked some investors around their QQ and currency, were perhaps not properly understood by the market. And I think collectively that, along with the big sell-off, saw a bounce. I expected, and I said it last week Wednesday when we were on air over lunchtime, that I thought Naspers might actually go down into the 220s. It seemingly hasn't. It could still. It's a company I like, and it's a company I think is worth nibbling at. Although I would be tended to stand back and wait and see if you can't get a price below 250.
And then just very quickly, Simon, the US closed today for a holiday, probably a much needed breather after the negative news flow we saw out of the US last week. But today we had lower than expected retail sales out of the UK and lower than expected services data out of the UK rather, and weaker than expected retail sales out of the broader Eurozone.
And both of them bad news. I mean, particularly on the retail side, we need those. We need the consumer to get back there and start spending. We've always said it's going to be fragile, but they keep and they sort of pop their head up and then take it straight back down again. And that's really what's going to drive the recovery. So it tells us the recovery remains on track, but fragile.